Okay, just want to give you another example of the 50% Fibonacci retracement. At the end of the session on Thursday, October 30th, starting at about 1400 hours, we had a big push down here from about this 77, 26,077 down to 25,877-ish area. Went a little under, actually, went all the way down to 55. But, basically, we've talked a lot about how price moves between the 77s. And you can see it did that all day here, mostly all day, the first half of the day, between these two 77s. And then again at 1400, it started moving down. And then it blew through about 1445. It blew through this one and went down to this one. Okay, then at the very end of the day at 1600, it popped up and went up quite a bit. Went up beyond this one. And this 15-minute candle right here is the reversal candle off this pullback. Actually, it's, yeah, I would say that'd be the one you want to measure. That's definitely the one you want to look at. You definitely want to measure that because why? We had a huge pullback, 200 points. There's the reversal candle, 15-minute reversal candle right there. So let's measure that one from the top. We take it from the top right there. And then we take it to the bottom right there. And our 50% level, I'm just going to mark this on the chart, is going to be 25,931 and a quarter. So let's make that dark green to match right there. Okay. So I'm going to take this, you know what I'm going to do? I'm going to take a small line here, do this one, represent the bottom of the panel. I'll turn that the same color, which is kind of a golden color. And I'll take this one to represent the upper end of the panel, the upper end of the zone, reversal zone. Kind of going to make that one kind of a teal, which is the same color as what's there. I think it's something like that. So close enough. Okay, now we can take this one off. Okay, so all we see is the middle, which is a 50% retracement of this candle, right? And the panels above. So if we go into, oh, I forgot to sync those to the rest of the charts. Go ahead and sync those up. Okay. So at 4:30, about a half an hour after the close, price suddenly whips down and kind of puts in a bottom like right there inside the zone, right? The zone itself, I'm also going to mark with a rectangle. I make that a little bit more opaque so you can, I don't know, something like that. Okay, so there is your zone, okay, comprised of 38, 61, and 50% in the middle. As you can see, price comes right down into it. And what's happening with MACD? I always want to talk a lot about MACD for this because this is sort of the missing link. This is the thing that is going to tell you when it's okay to get in, okay? Just the fact that it came in there, bounced, turned green, does not mean it's okay to get in. You have to wait for MACD, right? And I've said this over and over, and I'm going to continue to say this over and over and over again. It's not a trade until you've got a MACD converge, diverge, right? So you go ahead and you wait for that. And when you see it cross and when you see it begin to diverge, that's when you're good to go. And as you can see, price did one bounce, but it wasn't ready, right? Because MACD was pointing down. The next time you start to get the big expansion candles is when MACD has crossed and the fast line, which is the MACD line, has crossed the signal line and is trading up and over it. So then you're okay to get in right here. And, this is actually a great entry because this is the entry you want, right? This is the one that takes it all the way up to the top of the range, and that's where it's headed right now, is the very top of the trading range, the highs of the day of Thursday. Pretty amazing, right? Because you want to catch the lows. When you're trading, you definitely want to catch the lows of the trading range. You have to know when to catch the lows, and this kind of shows you how to do that. So you catch the lows of the trading range and you just hold, and you're going up. This is probably, let's see, 25, 26, 20, almost 26,000 to 26,000. Right now it's at 26,143. So that's right there's 143 points. So, okay, hope that's clear. Again, find your massive trend, find your counter trend 15-minute candle, mark it, know where your 50% is, and then just wait for price to retrace back into that 50% zone, and wait for MACD to do what it needs to do. And in this case, we had to have a fast cross, right? MACD line over signal line with your expansion candles. That's when you're ready to get in, and that's when you're good to go. Stop goes under. It can go under the low of this candle. That's okay. That's not too far of a stop. It's about a 30-point stop. Or you can just do the low of the most recent swing low, which is right here at 940.75, right there. Okay, hopefully you can see that. Let me zoom in a little bit on that. Okay, so that's your entry is right about here where the MACD separates at, say, 980, and your stop can be like under this swing low, 936. It's about a 45-point stop, but your risk to reward is great because it's going up really far. Okay, really far. Okay, that's all I got for you for now.